Welcome back to Fast Market here on the Schwab Network. It's time for our cash tags. For that, let's bring in our next guest. That's going to be Megan Brantley, VP of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy Monday.
Happy Monday to you. Happy Monday to Disney investors. Finally getting a little bit of a lift here at nearly 3-year highs. Is everything fixed for Disney? Because I keep on seeing like these social posts sometimes, Megan, where a guy, takes his family of 4 to the Disney parks, and then he comes out like looking in his pockets for money. He doesn't have anything, but they've got different silos of revenue generation. Is this a turnaround story? Because it feels like with this upgrade today that maybe it is.
Yeah, this is a stock. I think it's up about 10% year to date, but it's still trading well off of highs that it reached about 5 years ago. And so when we look at this, we see 2 really strong areas and one area that looks a little bit weak, at least in our data. And it's similar to those mentions that you talked about people feeling a little bit strained for how much they have to spend when they look at parks. But when we look at all of these different segments, the 3 that we have a special insight into that consumers like to talk about are streaming services, it's parks attendance and parks planning visits, and now it's cruise lines. And I will say one major green light that we have is interest in its cruise lines is growing pretty rapidly. You can see this on this chart. The top line shows web visits to its cruise site, where these are consumers who are booking. So this is really indicative of forward-looking booking, and those mentions are up by close to 30% year over year. So that's pretty strong. On the flip side, you'll see the mentions on the bottom. That's it's Disney Parks booking service, and now these are U.S. visits, and this is mostly tilted toward its Disney World theme park in Florida. And you can see a little bit of a pullback there. So this is where our data disagrees a little bit with the upgrade that we just saw. But I will note that this is, these are extremely forward-looking mentions. Whenever you think about booking a Disney vacation, you're booking a year in advance. So we think that visits look pretty strong for the next couple of quarters, at least when it comes to parks. But we might see a little bit of weakness whenever we're thinking a year out. But this is also something that could pick up if consumers, gain a little bit more confidence. And something that we'll continue to watch. It's not necessarily a glaring red flag right now, but I will say it's probably the weakest whenever we consider our Disney data at large.
Megan, what is the segment that you're most bullish about? Because as you talked about, you have 3 different segments that you're looking at. It seems like the market's also maybe paying a little bit of a premium for streaming. Maybe they figured out that business, but I wanted to kind of see from your data, what are you really optimistic about when it comes to this name?
I think right now our streaming data is really looking nice, and this is an area that traditionally Disney has lagged a bit. And one of the things that we see consumers actually engaging with some new titles. The content lineup has been really strong this summer, and we see that pay dividends when it comes to not just consumers dishing out money to actually watch the content, but then also purchasing merchandise and how that can play into parks attractions. So there are a lot of business units that can benefit from success in streaming. And another thing that Disney's doing well is it's really integrating its different silos better. So you see a bit of a drop off in Hulu, but one thing that Hulu has done is incorporate its content into that Disney Plus app. So now as a user, you're not having to navigate between several apps to get to the content that you want. It's housed underneath the same interface. And we see a lot of positive sentiment there. So I think that was a really strong move by Disney to kind of reinforce and make sure consumers are seeing all of the content that's available to them if they have both of these subscriptions. And then not to mention just the advertising lever. That advertising, especially with its ESPN offering, has been very strong. And, we're in summer, we're heading into, a fall of live sports. And we know live sports is a really significant driver of advertising. And we expect streaming to continue to be a beneficiary as live sports continue to shift onto streaming devices. And so we expect a nice advertising boost moving forward for Disney, and it to benefit from this, one app, all content strategy that it's employing and consumers are really enjoying.
Megan, when you look at this, I think a lot of the investor hype right now is probably based on the launch of that ESPN separate direct-to-consumer app that they're going to launch here this fall. And, we always talk about it with other streamers. Live sports is going to be the future for a lot of these streaming apps. and Disney seems like the leader in that regard. Is that kind of what your data says? And then they don't have earnings for about 5 weeks, what would be your score on this one also?
Our earnings score right now is bullish. So this move and this talk that we're seeing is not necessarily a surprise to us. We do think that live sports is really the big explosive lever, at least when it comes to advertising growth and how Disney can continue to leverage this and unlock this, because we know that people who watch live sports are a really captive audience, and so that advertising tends to be the most effective. But Disney also can tout and say, not only do we have these sports watchers, we have parents who are on Disney Plus. It has a wide range and a wide audience that it can kind of give to these streamers and these brands who are trying to reach this audience. So I think that live sports really is the key, and that's really one of the big differentiators, at least in our data, is because that's what we see really move the needle. And not only is this live sports, but it's streaming, which is where the consumer is increasingly moving and what the method that they prefer to, watch these sports. So I think for us, we're bullish. We'll certainly be watching the stock between now and earnings. As you mentioned, it's not for a couple of weeks, but for now, our data certainly supports this move to the upside. If anything, we're just watching that parks attendance because that's the main element that looks a little bit weak on our end.
Yeah, this has been a choppy trade over the last couple of years, and as I mentioned, nearly 3-year highs today. Every time they kind of head fake with these investors, and you get some bullish activity, maybe some positive commentary, something happens. So let's see if this works out. But great data as always, Megan. Appreciate it.
Thanks, guys.
All right, that's Megan Brantley, VP of Research at LikeFolio, breaking down the data for us. KG, give me your take here on Disney, because as I mentioned, it's been a choppy trade recently, but we're breaking out to nearly 3-year